Hello and welcome to this exciting video on trading strategy. In this video, we will discuss a powerful strategy that you can use to become a more informed trader and investor in the stock market. We will cover everything from the indicators and settings being used to implementing a solid entry and exit strategy. But before we dive in, I want to encourage you to watch this video until the end. You won't want to miss any of the crucial insights and tips we will be sharing, as this strategy uses free and widely available indicators so you can follow along while you do. And if you find this content valuable, please consider hitting the like button and subscribing to our channel to stay updated on our latest trading strategies. Also, we'd love to hear from you in the comments section. Let us know your thoughts, questions, or even your own experience with the strategy and backtesting. So, without further ado, let's get started taking your trading game to the next level. So let's start with the thumbnail and talk a little bit about this picture and what it shows. This shows a trend as described using double money flow index indicators, an average directional indicator combo, and a moving average with a ribbon on it. So let's talk about the settings for these indicators. Your moving average ribbon doesn't really matter, it's just to give you a visual representation of trend on the bars. So this is set at the standard settings. One moving average at 20, one moving average at 50, one moving average at 100, and one moving average at 200 to create the ribbon. The second thing we're creating is the money flow index double combo. And this is done with a standard money flow index set at 14, and then a slower one set at twice the speed at 28. We've colored the fast one green and the slow one red. This shows you reciprocations in volume and price over time relative to itself in a way that gives you a trend inside of trend understanding. So we can say here, this trend began as these moving averages rolled over. But you can also see it began on the money flow index combo when it broke below the midline and stayed below it. That was the force, the money flow, that dragged these moving averages over. Furthermore, we have an average true range indicator at the bottom. We have the very fast one set to 1. This will give you a bar by bar representation of relative movement over time. Then we have an average on that average true range of 10 to let us know which bars are larger or smaller than the others in that trend. So we can use this setup to say things like the money flow has begun to go down. The moving averages are beginning to roll over. The ADX is beginning to move into a new range, or the average true range is beginning to move into a new range of movement. So as the money flow remains on average negative, it will continue to pull these moving averages down. And the larger bars in this trend, the spikes in the average true range, bar by bar, will represent the largest down moves in the pattern. So how do we make these lines and what do they mean? Well, these lines were created all starting when it first broke below and held the midline on the 80, or when it first broke below and stayed down there on the money flow index combo, signifying money flow had turned negative. People were selling. So we can start drawing these lines. And I put a line every time it broke down below the bottom range and touched it again, created this line. And then we have another line down here where it does it again. They kind of sit on top of each other. This will represent the bottom trend line in the downward trend overall, where money flow is pushing price into new lows over this longer time period. Then we have extra lines where it comes back, breaks above the 50. So it breaks down and then back above, and it creates one line. And then it goes down and breaks back above. That creates another line. And it breaks down and back above. That creates a third line. And breaks down and back above, sorta. And that's where it's gonna hold. So I put an extra line there. And here it comes and breaks. It holds the upper band of the money flow index and then goes to break the top, indicating buying, lots of it. And you can see on the average true range, the larger bars have switched to be the buying bars. Here, I'll color them in. You can see that somewhere across the bottom here, probably right there, it goes, the average true range goes from showing you that the red bars are the bigger bars on average. There's one too, there's another one. But up until this point, the very bottom pretty much, the larger bars in trend are the red ones. And that makes sense because for a trend to continue, on average, the red bars need to be bigger than the green bars. Generally, you can have some weird trends where like this is like super slow and this is super crazy like bounce back in one bar and then super slow again, but that's not very often. And that would show basically as two small trends on the money flow index combo. So how would you use this for trading entries and exits? Well, it has to start from somewhere. So we have to go back a little bit of ways and say it was a period of buying. All right. You had some reciprocation down here, like I just said, where it shows you two trends where it breaks the top and then breaks the bottom. It's just a split trend, like a little reciprocation, trading in a range. And then there's a lot of buying. So coming off that buying, once it breaks below, say you start watching it anytime in here and you're not already in a long, you're just going to wait for it to start to break below. And then you can start plotting your pattern and see how it turns out. You can either take that first entry when this red breaks below here and gives you that first push, or you could wait for it to come up, but it doesn't always do that. Sometimes this goes on for a while before it gives you a little bump. So this is going to be your kind of aggressive entry here, and that'll be your conservative entry, if that makes sense to you. Depending on your risk tolerance, it'll be one or the other. If you wait for this, you might end up missing a chunk of the trade. If you go here, sometimes you'll end up getting hit with a harder stop. So where would you hit a stop if you're going to take this trade on, say, this aggressive entry? Well, the way I like to do it is the last high and then like double it, or 50%, because sometimes the market likes to swing up. Basically, I'm putting my stop where this would break out above the money flow index combo. Not when it breaks back into the midline, but when it breaks back above the top, like here or over here. So that's sort of, I was going to code this into a computer. I would have the computer put a moving stop at wherever this mathematically computes to as it follows it down. And then would stop out. That's why I put this line here. It would stop out here if you did that. But the better way to play this is to hold it kind of like a hot potato as trend continues. Hope you don't get stopped out. And then when it's in this lower band, or preferably down below the bottom down here, you're going to aim for one of these large red bars as indicated by the average true range indicator. Like this would be a good exit here. That's a good exit there. That's a green one. That's a red one. It'd be a good exit there. That's a good exit there. That's a good exit there. So you're just waiting for, because ideally if you're short, you want to sell into weakness, or you want to cover your short into weakness. You're I guess selling into weakness up here too, but you want to cover the trade into further weakness. I'm getting a little tongue-tied there. So let's look at some more of these. We talked a little bit about that one, so let's do a different one. You can go here. This is one. You see it stays above the band, so this is a trend. And then you can see it stays more or less below the band here, so that was a trend. Let's look at this. Is a pretty interesting one here. So let's start drawing this out. This happened overnight, so these are kind of small bars, but you can still kind of see how this works. So we had some kind of range trading where it's hitting the bottom, hitting the top, hitting the bottom, hitting the top, hitting the bottom, and then it's kind of staying below there. And it's worked this red one down here. You could have taken this long, but that would have stopped you out here, and you wouldn't really have lost much. It would be a small trade. And then you could take this, sell this weakness, this small weakness, hoping at the start of a trend. But you're seeing the moving averages are starting to come down some more, right? Starting to pull down. That's one. Then the upswing isn't that strong, so hopefully the downswing is stronger. You can see you got some reciprocation, and then it kind of comes up to this and holds it. That's just kind of how you can use the visualization, or you can just trade them all if you're going to use a robot, but that gets very time intensive really fast, so most people tend to pick and choose, right? So let's talk a little bit about this. It comes down, breaks the bottom, so you can start drawing your lines. It's the first one. It comes up a line there, and it's going to go down, stay below it, stay below it, stay below it, come up, and then do we have it the end of this pattern? There it goes, touch the top over there. So this one actually lasts quite a long time, but didn't go very far after the initial. You know what? We can wrap it up on this one. That's close enough. If you got super technical, it's probably right on the line. We'll recall that a new high over time, because it breaks this high by a little bit. So then let's start doing the middle lines here. So it's gonna come down here, touch, break back up, go down, break back up, start there. Back up, down, and break back. And you can start here. It's going to go down, back up. Where's the last one here? Is it here? It's going to go down, touch the bottom, back, up to midline, and then it finishes. So there's your trend, and that's how I drew the pattern. And there's it repeated on another downward trend. We'll do a long after this. But you can see like you'd enter here on this weakness, or you could get the conservative entry when it comes back up here. And then you're going to wait for some big red bars as trend continues. This is the first push here. That's 1. Then makes another one. That's 2. And then it kind of has a flat one. That's 3, and then ends. And this is just how you would draw that sort of reciprocation in momentum using the moving average, or not moving average. This is just how you draw that reciprocation of momentum using the money flow index combination strategy. And again, you could take a short like here. You go to this high, that's $4, so we go to let's go like $6, give it some room just in case it wants to test it a little. And you're going to go down. See, that's a big red bar. You could take that one if you're really greedy, but ideally you wait for like this full wave to finish and then go do another one. Most of them get 2, so that would be 1, 2, and then 3. They can continue. They can continue as long as they want, really, till they come back up to finish. But you're most likely gonna get 1 and then 2 at least. Sometimes you just get the 1 and it stops you out, but that's then you're going long because it would be back up above here indicating a trend the other way. And sometimes it can just flip you back and forth. So in a ranging market, it might just be best to not do this. So we come down here. If you want to be kind of the person who does a trailing stop, the way you can also do it, you can have your computer compute where this midline is, and then it comes back up here for the conservative entry and breaks back down, and then you can have it do a trailing stop on this midline, and then it would take you out when this crosses here, whatever the price is at that point. But down here, I mean, even if you took the second big spike here, not the first, but you took the first big spike, that's not a bad trade either, but the first, second, or third big spike are all really nice exits. Now, and then it kind of dwaddles around, so if you really held on to it for dear life and you had it all the way to like that spike or like this spike way down here, like you did a little bit better, but how much better, right? This is a pretty cool long, so let's look at this. So you can see, let's see, it's kind of waffling around. Well, I guess it's kind of a downtrend, these two. Like I said, a lot of times they get 2, but sometimes they don't. This one got 2 up top. I actually got 3. 1, 2, 3 on top. Then I had 1, 2. I mean, this skin's kind of chunky, 2 or 3, depending how you want to cut it. Sometimes it's a little iffy when the range isn't that wide, right? But then it breaks back up here, and it's going to hold this a little bit. So you have your aggressive entry here, or your conservative entry there. And you can see the average true range is starting to spike up right at the open too, to indicate there's a lot of buying because these are the green bars are big. I mean, the red bars are big too, but it's going up. Trend is going up. Everything looks like it's going up here, and it's going to stay above the midline for the most part. Like it looks like it brings the red line down to it for a little bit, but it doesn't really draw that shorter term or the longer term one. It doesn't really draw the longer term one, beneath it. So this trend's kind of continuing. Let's see. So you got continue to draw it out. We have a line where it breaks the top, and then a line where it breaks back the bottom, and then we can go and breaks up, and it breaks back down. So that's the first cycle. So we can start a line here. We can go for it to break. Call that the same one. Break up, and then break down here. Let's call that one line. And start here. And go on, break down, break back up, and then we're going to break down again right up here. So that's line 2, and then we down, up, and down again up here. So that's line 3. This one gets kind of compressed at the top, and then in this trend, you just hold it around for the first one, wait for the second one or the third one if you have the stones for it, and then you get one of these big spikes here. These green bars here is a good exit in the second wave. Maybe even this one here. If you see some of these red ones here and you want to get out of it, it's actually not a bad exit overall, because it kind of, after it hits here, it kind of flattens out. But either way, you get several decent exits up here. Even this one's even better. This big spike way up here, but that was way far into the third wave. So you got, you got 1, you got 2, you got 3, 4 for this trend. That's a long trade. So see, so you're going to take the aggressive one, the aggressive buy. Where would you put your stop? Well, you're going to go for the low down here, just 4, and then you're going to give it a little bit, so like 6 or 7. So I'd put my stop like over there, What's that? 48. Probably go down just a hair for around 48, just a little bit below 50. And let's say you held it to this spike here. It's going to give you about 3 to 1 risk to reward ratio for a good solid trade. And see, you got even some more big spikes if you wanted to keep on going. One there, another one there. But ideally, if you are long, you want to sell into strength, which can be identified using the money flow index around the top, along with the average directional or the average true range spiking when graphed at 1 bar at a time. To wrap things up, we hope you found the information helpful and insightful. If you have any questions or feedback, please leave them in the comments section below. And if you enjoyed this video and want to see more like it, please consider liking and subscribing to the channel. By doing so, you'll stay updated on our latest trading strategies and tips, helping you become a more successful trader and investor. Remember, trading is a constant learning process, and we're here to help you every step of the way. So thanks again, and we'll see you in the next video.